Is today the kind of day that you would buy the dip? Or, as Meg just outlined, is there too many uncertainties out there? It would be more prudent to really wait and see how this all plays out over the next few weeks.
Well, I think today you could do some nibbling, but I think you'll have some better opportunities for bigger bites on Monday. I think that over the weekend, you're probably going to get investors who are nervous about this new variant, as you reported, NU, and so probably put in some sell orders over the weekend. So I would tend to think that you will have some better buying opportunity points early in next week. But I, too, think that at least the way it stands right now, it does offer a reason more to buy than it does to bail.
Keith, during this segment, we hit session lows for the Dow today, although we've come back a little bit since then. How much do you think that this, holiday week, known for having lower level of volume and limited liquidity due to the shortened trading day, is that playing a factor in some of the larger swings that we're seeing, or would you expect this regardless of what day it is?
Well, first, great to be with you on Black Friday, even though it's an unexpected Black Friday. I do think the day after Thanksgiving is a thin market. We expect things to be exacerbated. Either way, though, this would have an impact on the market. It complicates things somewhat. But I think the broader context is, before this news came out, the market has risen about 9% since early October. And I think it was due for a little bit of a consolidation and a little bit of a gut check here. It's too early to know, what all the impacts are. But I do think people should have some optimism that we just went through, almost 2 years of this pandemic. We've seen businesses adjust, consumers adapt, and markets and profits are at record highs. So I'd be careful about getting too bearish on this uncertainty that we're seeing today.
Yeah, I mean, it's a point that we were discussing in the last hour, Sam, the fact that potentially this was a market that was poised for a pullback like this already. So I wonder what you think of valuations here. And I also wonder what you think about the earnings season that we're now coming through, given the fact that even though it was another strong quarter in terms of profits and even in terms of margins, a lot of the forward guidance is not quite as exciting as Wall Street had been hoping.
Well, I think you're right on all those counts. First off, on average, the market rises a little more than 7% from the October low through the end of year close, and has done so more than 90% of the time since World War II. So right now, with us being up more than 9%, yeah, we are ahead of the game, and as a result, due for some sort of digestion of that gain. The most recent quarter's reporting put it at the 48th quarter out of the last 49 in which the actual results exceeded end of quarter estimates. So we were up more than 43% in the third quarter. Fourth quarter looks like we're going to be up more than 20%. And I think companies still are reluctant to give too much guidance into 2022, especially with the concern about COVID, with the concern about higher interest rates, et cetera. And also management likes to manage expectations. So I would tend to say that while valuations are stretched and have been for quite some time, they are currently a little more than 30% above the average since 2000. I would tend to say that should interest rates not accelerate to the upside, then we could maintain this elevated valuation.